important. I mean, it's why it's so important to just trade. Like you're gonna have wins, you're gonna have losses. That's part of the game. You're gonna have multiple losses. Like you're not gonna just once you think that you know that you're good at, you're not just gonna all of a sudden never take a loss anymore. Like you're gonna continue to take losses. So all it is about how you handle the losses and how you handle the wins as well. Like you shouldn't really feel too good at the wins and to a degree. Like you celebrate for a second and you're happy that you made some money, that you caught some pitch, but then you move on to the next trade or the next day because none of that matters anymore. Like you can go the next day and you can lose the next three trades, but you have to have that balance of emotions. So like we always talk about, trading is so much not so much the charts, but so much in the discipline, the mental focus and just the consistency. So looking at our chart, right? First things first is always, look at the DXY just to understand what direction are we looking for in the market as far as our USD pairs. We talk about the DXY so much because the main forex crosses all necessary, in a sense have US they're all, they're heavily USD related. All the markets, even like GBP, JPY, USD, when there's USD news, you see GJ move and whatnot. So all the pairs in a sense do affect by the dollar because the dollar is the strongest currency. But also that's, it's why we look at the dollar so much because of if you know what the DXY is doing, then you can have a really great idea of what your pairs are doing, like GU, EU, UJ, AU, etc. Right? So what you always do, right? You want to identify where Sunday was at. So if this is Friday, Thursday, Wednesday, Tuesday, Monday, this is Sunday. This is the market open right here. So this is what we had happen during this week. So we almost kind of see how we started the week off right here, and then we ended the week right here. It almost pretty much, started and ended in the same exact spot to a degree. So when we're looking at this and we just, we analyze that, we're coming off a bearish week and now we're coming off, in a sense, almost like a sideways week. A lot of the moves this week were, if you took profit, that was the best thing to do because the market was going back and forth. So it was good moves, but when you look at it, after, it might not look that good. It might look like it was a choppy week, but when you're actually live trading, and that's the difference of, like, you can back test as much as you want, but when you're back testing, you kind of already have a bias because you know what happened, and the chart might look like it was sideways, but and the reality of it is, as a day trader, there was like, there was clean moves for that day and for that session. But it was just a matter of, did you follow your trading plan? Did you take profit? Or were you being greedy and, trying to get too much out of the market? And that's the difference between having a profitable week and a non-profitable week, is your level of greed more than anything. So if we're looking at the DXY, right? Okay, cool. It was like about a sideways week, but now we come and we focus on these moves. We focus on our moves that actually happened throughout the week on our main pairs like EU, GU, etc. Right? We saw a lot of back and forth movement. Like we said, like this is Thursday or Friday, Thursday, Wednesday, Tuesday, Monday. So if this is where we started the week off, and we started the week off right here with EU, and then we ended the week right here. It was, and it ended bullish, but it was very, very slightly, it was bullish. We can clearly see that it was back and forth from that Sunday open multiple times. It kept trading right back, inside that same area. So just looking at that, right, and just going over these moves on a day-to-day basis, though, it was like you said, it was clean moves throughout the weekend. Everything was just a matter of patience. So let's just go day by day with these moves, right? Was Monday this week was the Martin Luther King. So we know we already talked about a lot of these moves, but just going over, just seeing how the buyers versus sellers react in the market, right? If we're looking back from like point A right here from the beginning of the week, and we mark off we have previous where we have previous buyers and sellers at from, from point A, and we look to the left and we go that 3 to 5 day look back, and we just start finding where and when I say 3 to 5 days, because sometimes people get on their charts and then they look back, 20, 30, 40 days to see what happened in the market. And all that data is almost, not to say completely irrelevant to day trading, but it's not as relevant as the current info and the most recent info that happened in the market. So if we're identifying in the last 3 to 5 days where buyers and sellers are at, we're going to say we had buyers happen here and we had sellers happen up here, right? Those are where the strongest buyers and sellers will be at from the previous day. Same thing with the days after that, buyers and sellers. But we can see how those buyers and sellers have already been taken out the market, either to the downside or to the upside. Right here, they're still available. Buyers from over here still in those trades. Buyers from right here got stopped out, but it gave out, like I said, right there, another buy play. pushed up. We had sellers right there at one point. It pushed all the way up. And then what did you have created up here? Sellers, sellers. What did we just create right there? What did we just form? What did you just form right there? Like a double top, right? So what would be considered, what would you be looking at right there? Is that liquidity in the market right there? So then you mark that. And then now going into your new week, you say, okay, this is where we start the week off. I know I have buyers here, previous buyers, and I have previous sellers up here. Same thing, that double top, we got a double bottom type of thing right there. Money sitting down there. So now when we're looking at this, right, going into the week, we see what happens first. What does the market attract to during Asian session between 5 and 12 o'clock right here? Between 5 and 12 o'clock, where does it go? It goes and it takes out these highs right there. It takes out the sellers. And what happens after it takes out those sellers? New sellers come in and now they start dropping it to the downside. And after 12 o'clock, who's in control of the market there? After the first box ends, the first box is between 5 and 12 o'clock. So after that box ends, who's in control of the market? Sellers are in control coming from Asian session, right? Sellers are in control coming from Asian. And now where does it push to? Now it starts to push towards lows, right? Now it starts to push towards lows. So if we marked our major highs and lows that we saw right there, then you start to have minor highs and lows that are incorporated with those. Like these lows right here, buyers got in on those retracements. And it'd be the same thing with the sellers. Sellers got in here, and it's the minor ones that you see inside of, inside of a trend. Because when you see those minor ones get taken out, then you also expect those pullbacks to happen from those areas too after you see the minor highs and lows. But your strongest moves and your moves for the overall day are going to be coming from, those white highs and lows, those major highs and lows. So you have your majors and your major highs and lows and your minor highs and lows. It's just, mapping out market structure, then pairing it with time and price. So on that day, on this day, specifically on Tuesday, what do we see happen right here? It pushed all the way to the downside and it played inside this big figure. And then what happened from right here? It played back inside this low from the previous day. And after it came back to this low, what happened from there? Then it bought up and kind of went in consolidation for the day. So then the next day, it's just rinse and repeat, right? Now you mark your major highs and lows, which you kind of already have. You have that high right there. Then you go into your next day, right? You go into your next day now. What do? 5 to 12, you're not trading again. After 12 o'clock, you start to mark off your major highs and lows. What do we see happen right here? We have our Asian high, and we have this high from right here. So almost again, what is created? A double top, money sitting right there, right? And then what happens during London session between 3 to 4 o'clock? Right here. It takes out that double top and then it drops down. And that would have been a nice sell play to take right there. And then what do we see happen though throughout the night? It ends up coming all the way back up. And this is why I always say every single night and every day when you guys are trading, often we always have the right direction. It's just a matter of the timing and your discipline to take profit, then come back at it the next session. Because if you did, for instance, take a sell play over here between 3 and 4 and you caught some pips and you took it down and it retraced and took you back out, but you caught 20, 30 pips and you secured profit. And then you wake up for New York session between 9 and 10 o'clock up here. What are you going to do now? You marked off your major highs and lows. You have a minor high right here, your major high right there. And then what happens between 9 and 10? It takes out the minor high, major high is respected. And then what do you get from there? A drop to the downside. And where does it go now? Now it goes all the way back to those lows, those minor lows that were created during London, takes those out, and it continues dropping. But where does it drop to? More importantly, you look to the left. This is why I say to get off the phone and just get on your computer. It's so important. It's more, you're going to do way better. You're going to become way more profitable by, doing your markups on your phone or doing your markups on your computer. Now, where does it go and it tests to? It goes and it takes out this major low that was, considered a major low right there where the market came and dropped all the way to and pushed all the way up. It came all the way back to that low on Tuesday. And what happened from there? It took out that low, retraced, and then what happens the next day during Asian? It goes back, takes that low out, and then after 12 o'clock, that's when we see it go and it attracts all the way back to where? To that high right there from the previous day. And where does it end up going to? It ends up going and taking out that high. It ends up going and taking out those highs right here, these major highs that we have marked. It goes out and takes out all these highs. And what time does it do that at? between 9 and 10 o'clock. And what happens between 9 and 10 o'clock drops all the way to the downside. Also plays off of an institutional level. That red line right there, psychological levels, quarter points, not, quarter points if you want to consider anything to make it as simple as, the simplest terms is just modified quarter points. Instead of the 75, you use the 80. Instead of the 25, you use the 20, and you still use the 00 and the 50 as your psychological levels in the market. So as we can see, like I said, it comes up right to that level. Also between 9 and 10 o'clock, it's above all these. You wouldn't think about buying at that point. A lot of people would think about buying because of how much it bought up. But as the market maker and a smart trader, you're going to do it the opposite of what everybody wants to do. And that's why you take it back to, you take it back to the downside between 9 and 10 o'clock. So now going into the week, it's the same cycle, back and forth, back and forth. It's a back and forth movement type of thing, and just using using your confluences, staying with the same pairs. And this is just why it's so important, to stick with the same pair all week, because you'll find those moves throughout the week and you'll just be confident that you're taking the same move over and over and over again, right? Like it was the same plays with EU. It was the same plays with EU throughout the whole week when you really look at it over that broad perspective, right? It was the same sell play, pushed up, back inside, dropped down, took out lows, pushed up, took out highs, dropped down, did the same plays during New York session, came back to lows, pushed up. Yet today, took out highs during London, dropped all the way down, took out lows, pushed up for New York. So it was clean, it's clean moves. That's why I say trade EU. EU's like one of the most traded pairs ever because of these reasons. This is why people go and when they, like you see pages and whatnot always posting about Forex and they post about EU a lot because it's one of the most traded pairs. It's heavily, it's like, the most correlated pair with the DXY. And you'll be able to find moves. Like you'll be able to find moves. It moves consistently. You can see how it goes back and forth. And that's why, you when you're day trading and you know what type of trader you are, you're going to take your profit and take your money because you know it's going to be more opportunities in the market, as the week goes. So you're not being greedy. You're going to follow your trading plan. And just follow your moves in the market and trust that that this is how the market moves, right? We can see how much EU goes back and forth. And this is, like I said, this is why it's one of the most traded pairs because you can catch these multiple moves over and over and over again. It was literally, it was just buying up. It was making those steps up, pushed up, took out, dropped down, pushed up, made a retracement from that buy up the previous day between 9 and 10 o'clock, bought up between 9 and 10 over here. It did the same thing over here, bought up between 9 and 10 o'clock. So, you can start catching the moves over and over and it becomes repetitive, and that's when the profit starts to roll in. So, um, let's look at GU too. GU had good moves, and GU's very heavily correlated with the DXY too. But GU is a little bit more, GU can be a little bit more tricky to trade as well sometimes because GBP is also one of the most traded, GBP is the second largest market, in the world. So GBP is heavily manipulated, and you're going to see heavy manipulation in GBP pairs, and that's what comes with GBP. So EU might not move for as many pips sometimes, but it might move smoother than the GU does. GU does a lot of stop hunting. It does, but it gives out clean moves. But I'm just being honest with you guys too, right? So like today, EU only moved 56 pips for the day from top to bottom. But when you look at GU moved 69 pips from top to bottom. So it moved for, it moved for a little bit more pips, almost 70 pips for the day. So from top to bottom, but that doesn't necessarily mean that you could have made more money on GU because the move might have been harder to catch, but and that's the truth of it. So looking at GU like last night, looking at this move from last night, right? The buy bias was completely right. Like if you sold off, obviously you caught a really great sell and everything. But if you tried to hold that sell all the way for the rest of the day, then you would have got stopped out. So that it wouldn't have been, it wouldn't have been relevant still. So, but looking at this trade, right? Looking at this move, and like I said, I wouldn't have been mad. I was looking at buys last night. The only reason that I didn't take a buy on GU last night was just expecting for it to drop down lower still at some point. So even though it did really look like it was enticing to buy during London last night, considering London being the first session of the day, wanted to really see it potentially drop to this big figure and back to or lows, right? Because if we go through from point A and you do your markup from the last 3 to 5 days, 1, 2, 3, let's just do the last 3 days. This is what we see right now, right? We do our markup from the last 3 to 5 days and we mark off our highs and lows, your major highs and lows. This would be considered your last major low. You have your high, then you have your minor high right there. And then, you can go in between the trend and, you see minor, minor moves, but those are not as important, right? We're just going where the key structure points are at. So now what do we see happen is that if this is our last major low and this is where buyers were at from the previous day, if this is where buyers were at from the previous day, then in order for me to buy between London session between 3 to 4 right here, I need to see the market come as close to those, it doesn't necessarily always have to trade underneath it, but you want to see that push back to that lows and see how the market starts to react there at that level. And then considering this also being a big figure area, this would have been, this is where I was looking to see if we got that drop last night for London, and then I was going to look to buy, but took a buy on GU in the morning because of why? Because now going into the morning, you let London play out, and between 3 and 4 o'clock, we didn't get that push to the downside to get in. So, okay, cool. Didn't take a buy, let it play out. Didn't trade you last night. Didn't really get in too much last night at all. But then when we wake up for New York and you come, that's why I always say, go to sleep after 4 o'clock if you didn't find a setup, because it's just gonna, you're gonna, the market's gonna move. The market always moves. That's not the hard thing. And that's the hardest thing about trading is that the market is always open. If the market was literally only open between 3 and 4 o'clock and you couldn't enter any trades between 3 and you couldn't enter any trades after 4, and whatever you were in, you're in until 9 o'clock in the morning and you can't do anything about it and you can't enter any trades after that, a lot of people would be a lot more profitable because you can only literally enter, like, your broker only lets you enter trades at these times. But because you are allowed to enter trades at any time, that's why brokers are profitable and that's why brokers are rich and that's why people want to be brokers, because people willingly give their money to the brokers whenever they feel like it. At any point of the night, at any point of the day, they just start trading, and next thing you might make some profit, but then you look up and everything's gone plus what you had because you were, you're just donating. And that's, like I said, that's the discipline of literally just disciplining yourself to only trade at certain times, and that's how you'll really become profitable. So between 3 and 4 o'clock last night, didn't get a push back to these lows like we wanted all the way down here. So didn't take a trade with that. Didn't, let it be. But then when you wake up for New York and you see that, okay, cool, good thing we didn't buy, ended up pushing back down more. And like I said, it's not a bad thing if you bought. I know a few people that bought last night. And like I said, it's not a bad thing. It would have, and at some point you might have been able to catch some profit if you got in around 3 o'clock or something like that and it bought up and you were in profit and you might have, been able to catch a little bit of bounce. But it's why you protect your trade. It's why you use a stop loss. And and then you just, like I said, the consistency. You're gonna take losses. Losses are part of the game. But if you don't come back at it the next day or the next session and you don't continue to trade, then you let those losses win. And people always preach losses are lessons and whatnot. And honestly, sometimes I think to myself that, like, that's just bullshit. Like, losses are losses. Like, that shit hurts sometimes and it's part of the game, but that's why you don't get too highs on the wins either, because like you said, you have to continue. You're going to move forward. This is something that we want to do for the rest of our life because we know what, the opportunities that this brings. So you can't get too high about the wins and you can't get too low about the losses because it's going to happen. But like I said, you just have to continue to trade. That's all it is. Just trade. Like, just continue to trade. Continue to be consistent, be disciplined, trade the same pairs, and stick to it. Like, we get on these calls, and that's why I tell people all the time. It's like, don't get on these calls and let me continue to post every day on the page, post in the chat, pictures of entries and pictures. And I mean, I damn near trade. I'd be up for London and I'd be up for New York almost damn near every single day. At some point, I'm on the charts, right? And it's like, and it's not about trading every single day and doing that, but it's about the consistency of being on of trading. You don't have to be on the chart for 30 minutes, for an hour, 2, 3 hours. That's not what it's about, just staring at the charts all day. But everybody has, you get on the phone, you get on Twitter, you get on TikTok, you get on Instagram, whatever it may be, at nighttime or in the mornings, you have time to look at your chart and trade every single day too. So, and that's, like I said, the more reps that you get in, that's where you'll be profitable. And at some point, you won't be trading every day, but To really get profitable and really get to where you want to be, you got to get the reps in. So, like I said, just coming back at it for London, New York session in the morning, because bam, London doesn't play out and it ends up dropping down more. But when you wake up between 9 and 10 o'clock right here, what's the only thing you're gonna do right here? You're gonna do your markup at 8 o'clock, right? What do we always talk about for New York, your New York session drill entry? You want to talk about entries and exits and whatnot, or how to find entries at 8 o'clock in the morning. That's 8 a.m. The red line. You're gonna mark off your what? Your London low, London high. That's the start of London right here. This is your London session high. This is your high of the day. Your Asian session low has already got taken out, not relevant anymore. Now you have your London low, you have your London high, you have your Asian high. So you know where sellers are at in the market and you know where buyers are at in the market from the previous sessions. And then if you go back at it from the previous day, we have our buyers at the low from the day over here, and our sellers from the day have already got taken out. So sellers have been in control all day, right? Sellers have been in control all day because they took out the previous sellers, they dropped the market down, and now they're attracting towards the old buyers, right? Sellers are in control. Sellers in control and they're pushing towards lows. So you have to be careful when you see sellers in control of how far can the market drop before it buys. So like we said, at 8 o'clock in the morning, we can see this buys up right here, right? It buys up at like 5 o'clock, 5:30, something like that over here. But that's not relevant. That's not what you want to get in a habit of trying to catch that move in the middle of the night. Because what happens is it gets into profit and you might be trying to take it all the way back up and take the play. But then, like you said, it takes it up, it hits Asian low, and if you don't take profit, it comes all the way back, stops you out, and now it makes that real move and it goes all the way up and takes out the Asian session high at between 9 and 10 o'clock. But you might not catch that move because you've been up all night, you're tired, you oversleep because you were staring at the charts till 6 in the morning. Now you have no chance at waking up between 9 and 10 o'clock because it's not realistic. Whenever I'm on a phone with friends before trading or even talking to people and they're like, yeah, I'm about to take this nap at 12 o'clock, I'll be back up for 2 o'clock for London or 3 o'clock. No, you're not. Well, the high chance you might. I'm not gonna say you're not, but it's a high chance you're not if you've been staring at the charts already all day. Now, if that's your first, you haven't looked at the charts and you're going to sleep at 11 o'clock, you might wake up for 2 o'clock. But if you've been staring at the charts and you've been staring at the charts and you've already exhausted yourself all day, you're not going to wake up for London. And that's just a simple truth. And then the worst part is you might wake up in the middle of the night at 5, 6 o'clock, and then you start trading all night. And now by 9 o'clock in the morning, you done traded all night and entered the market 3, 4, 5, 10 times. And now by 9 o'clock, you're screwed because your mind is all over the place. And then you look up 9 and 10 o'clock, you don't trade, and you come back at the chart at 12, 1 o'clock, and the market went crazy, and you mad at yourself because you would have caught that move if you would have just waited. And that's just the mental up and downs that happen to everybody, that happen to everybody. And it's all a slippery slope. And that's why I say you have to form good habits because one habit leads into the next and it leads into and it's a snowball effect. And next thing you know, you look up and any profit that you made is gone, or or your account, you haven't made any profit. Now you're in negative. And when you're in negative, now you're in desperation mode. And when you're in desperation mode, now your account is gone. Now you look up and now you either, now you got decisions to make. Do I even want to trade still? Do I want to lose money? Do I believe in this? Do I believe in myself? And it just leads into a whole cycle that you don't want to be in. So, I'm just saying that to be honest with you guys, because it's things that I go through that everybody goes through. Nobody is, subject to not going through those emotions when trading. So that's why I always say it's like just the consistency of getting on the calls for 30 minutes, an hour, at most an hour. I try not to make the calls long because I don't like being on calls that are long. Same things with the trainings. Like everybody gets sidetracked after an hour, 30 minutes, and people have things to do. We all got things to do, things that we want to go do and whatnot. But we all got 30 minutes every day to get on a call, 45 minutes to get on a call every day, look at some charts, go over because this is money. Like everybody wants to make money. This is true freedom. It's true freedom to be able to wake up, make some money, and then do whatever you want for the rest of the day. Whatever your true passion is. A lot people's true passion isn't working a job. At least I know, like majority of people's true passion is not working a job, no matter how much it pays you. People want to own business. Some people don't even want to own business. Some people don't want to do much of nothing. That's how sometimes I am. I don't want to do much. Like sometimes I like just being able to wake up, make money, and enjoy the rest of my day. Go to the gym maybe, or play the game with my friends, and come back at that and do it the next day. You don't, some you don't have to do much. But if you that's the luxury of trading is you can literally do whatever you want and nobody can tell you that what you're doing is wrong in a sense, honestly, because if you're successful at trading and you're disciplined and you're being consistent and you make this a living, then the world is yours, truly. Like you can travel as much as you want, you can live at your own terms and at your own freedom, and that's the true peace. So, like I said, it's just the consistency of trading, trading, trading. You got stopped out GU buys last night. You come back at it 9 in the morning, you catch that same trade because it takes out your Asian session low right here. And then it buys up. I don't even have my RSI up. We haven't even been doing too much. I don't know. I need to put it back on all my charts again, honestly. But even just looking at that, let's just bring up our market maker real quick over here. Even just looking at this, right? Like I said, between 9 and 10 o'clock, right here, why would I get in a buy here between 9 and 10? Because it's already sold down all day. It's already made the sell pattern drop, drop, drop. So between 9 and 10 o'clock, we identify the highs and lows. And then also on the RSI, it's very low too. But it hasn't actually pushed all the way back up to the 80 to the sell level. So it's closer to the buys down here. And we're still wary of that it could push down to the 20, but overall we're going with the chart too, right? And what the chart is telling us, and that it wants to push up. And London looked like it wanted to push up, looked like it really did. And like I said, it pushed up in the middle of the night, but all that is irrelevant for the fact that it came all the way back down and then made its move, when it's time to trade. So looking at the RSI, like I look at the RSI every morning when looking at my setups and look at EU, like look at EU between nine. And it's like I said, everything is a matter of from indicators to trade. Everything is a matter of timing, when you should be trading and when you should not be trading. I love E, like I said, I mean, people in the group have made fun of me for trading EU so much and and why because it moves slower. But I promise you, them slow pairs are the real payout pairs. Like them fast pairs, I don't like them headaches, honestly. Like, I'm too old now. I'm thinking I turned 26 last year. I turned 27 this year. I'm too old for those fast pairs. Maybe when I was in college a few years ago, 2019, the fast pairs were fun to trade every day and whatnot. But now, give me the nice, smooth, slow pair that's gonna give me my 20, 25, 30 pips on a day-to-day basis without giving me a headache, honestly, like truthfully. And that's what I love. Like, and like everybody has their preference and whatnot, but like we talked about earlier in the call, EU is also one of the most traded pairs in the world forex wise because of one the moves because of how heavily it's correlated with the DXY, and that like I said, I mean these moves with the DXY, you see the move happen, and then you go and you look at EU, like look at the DXY this morning, right? What happened with the DXY between 9 and 10 o'clock? What did it do right here? It took out what? What is this black line on the system? What is that black line? What is that Y? What does YH stand for?
Yesterday's high.
Yesterday's high, right? DXY took out yesterday's high between 9 and 10 o'clock. So if you go look at EU, what are you going to look for with EU? It did not take out yesterday's low. It didn't get that far and take out yesterday's low, but what did it, I mean, what did it do? You go to the 5 and 15 when you're looking for entries, and there's only so much that you would look to do there, right? You get in your buy because you're confident that DXY is going to drop between 9 and 10 o'clock. You look at those EU buys, and there's only, like you said, you look at it. This is literally you measure your stop loss. We want to be about 20 pips from entry at most, right? Between 9 and 10 o'clock, EU was 6 pips from the low of the day. You got 20 pips to risk for the day, 20 to 25 pips from the day, and you're 7 pips, 6 pips from the low of the day. And you look down at your RSI is already, and like I said, back to the point of you trade all night, you think that you see the move, but you don't see the move because that's how the market gets you. And if, like I said, it's the same thing. You're not a robot, and like I made the comment, like you're not a robot, right? Because you look at the RSI and the RSI is low, and you're like, yep, buy. Time to buy. It's dropped as low as it can go. It's gonna buy up. And sure enough, it buys up for probably five, it buys up for a little bit, but it hits your Asian session. And I don't even care about the pips. Like the pips are so irrelevant because when you're in profit, you forget that you're in a slow pair when you're in profit. Especially as your lot size increases and you're in there with a 0.50, a 1.0, and you're only up 50, you're not gonna give a damn that you up 15 pips because you're up $150. You're not going to be complaining about 15 pips when you're up 150 and you only risk 6 pips on that trade, right? But when you're risking 25, 30 pips every single day on these super fast pairs, I mean, I don't know. Like I said, everybody's got their own preference, but at some point you want to be, you want to be profitable and be consistent. Like, this is what you're gonna do. And you're gonna stick to it. So, like you said, though, it looks so clean between that. What is this? Like 7 o'clock in the morning, 6 o'clock, 7 o'clock in the morning looks beautiful for a buy. RSI is low, clean sell during London. Didn't go over that, but what happens now? It looks like it wants to buy up, doesn't happen, drops down right at 8 o'clock. Right at 8 o'clock, it starts to drop down heavily. And then between 9 and 10 o'clock, what happens? It takes out the London low. Your RSI is back to being low again. It buys up and it buys up on the RSI, but the movement isn't that strong. So then when it drops down again and you see the RSI drop all the way back down to that same low right here where it bought up right here, that's considered that's what people call a divergence in the market because you have this low on the chart and this low on the RSI, they're differently correlated because this low on the RSI, this low right here doesn't come, right? This is respected on the RSI like a fib. But this one right here, it comes and it creates a new low. But the RSI doesn't create a new low on the RSI. So it's like you said, the RSI is just like a chart. So that you see that the RSI comes and drops back down, but it's already created, like you said, it's a retracement. And then what happens on the chart? The chart doesn't make a retracement because if you're looking for that same retracement, it would stop somewhere right here, and then you would find that bounce up. But this is what they call a divergence. Divergence is it the chart drops down lower, the RSI doesn't, and then what happens between 9 and 10 o'clock? Now your divergence plays out, and where does it go? The RSI goes all the way up, and your chart follows along with it. You exit the trade right there at that point, right at Asian high. Look where Asian high correlates with the RSI. RSI right here, Asian high right there. That's your exit point. It pulls back. And yeah, okay, cool. Yeah, like you said, it goes up a couple more, a little bit more for the day, but all that, that's irrelevant. That's your exit point. You have your exit points, you're out that trade, and that's your trade for the day. And it's the same thing with the sell during New York, the sell during London. This is why I say, GU, I love GU. I trade GU all the time, but GU, you got to be, GU is a pair that you have to be, you got to really study. You got to really study. Like, you got to really study it because it is correlated with the DXY, but it is also correlated with Euro GBP. And Euro GBP is, like I said, Euro GBP heavily affects GJ or GU and all the GBPs as well. And that's why you would see that like GU dropped down lower last night and gave out a weird pattern because if we go look at Euro GBP, that's going to be why GJ did that. And, it doesn't look like they did the same. Then, like I said, it's the correlation. GU and EU did the same thing they really did the same thing, just structure was different. But then structure aligned itself during New York session is what I was trying to say. The structure was different during London. GU dropped down and it didn't actually create a real sell pattern because it didn't attract over back to the highs, but it ended up dropping down throughout the night, right? But EU did give out an actual sell pattern and dropped down throughout the night. And then, like you said, they both bought up for at pretty much from the same point during New York session. But GU had a weirder structure. It had that structure like this, came, dropped down, dropped, and did that type of move. But then it bought up the same exact way for New York. And that's the correlation. And that's like what I said. I trade on my trading view. I only have GU and EU on there. EA is only on there for, other reasons, for the bot reasons. But I only trade GU and EU. That's what I told myself this year. I don't have no real reason to trade anything else and even really entertain looking at anything else like that. Because these two go together. They go together. You got to just find the correlation, and then they pair with the DXY, and you're going to be profitable. You're going to be profitable. I had a lot less stressful week already these last couple of weeks to start the year than my last couple months last year. And just being honest, because you guys were on the calls. I mean, we look at so many things. We would go peep so many things, and I'd be like, "Oh shoot, that looks kind of good. I might trade that tonight. I might trade that tonight. I might trade that. I might trade that this week." And then it's not good because that's not what I trade. It's not what I've been trading for the last 2, 3 weeks, last years. So, and it's just distractions. Like I said, it's so many distractions. That's where people lose out with this is there's so many distractions with trading that you have to block out all the distractions. You have to clear it all out. So I tell people don't have everything up on your trading view. Don't have everything up on your MT4. Clear everything out. Go right click on your MT4, hide all. Oh, there you go, right there, right? You don't want anything else. Everything else is irrelevant. because you don't even want to think about dragging it over and just checking it out. Nope, don't even give yourself that opportunity. This is all you could check out. That's all, right? You don't want to be looking at anything else. You might have your, have your side pair, have your third pair right there. But I'm telling you guys this, and I'm, talking to myself too. But at the same time, like I said, I really want you guys to be on this same thing because there's no reason why we all aren't catching the same pairs, catching the same entries. And you guys see me post every single day, either for London or New York, catching some type of trade. And like I said, it's just don't let me keep posting. That was my biggest thing when I was learning from Tim. You guys, everybody knows Tim. I don't even be, I don't gatekeep who I learn from. You guys know Tim. Everybody knows. We used to get on the calls together. The people that were in the group, in 2019, we used to get on my mentors calls together, and then get on, Sniper U calls and Winter Circle calls right after, and do the same exact training. Damn near, we would damn near do the same exact, simplify it with the system and everything that we, have access to, but it was like doing the same things. And it's just a duplication, and it's duplication. That's all it is. It's just duplication and replication, duplication and reps. So, have your third, your wild card pair that you like to trade, find out what it is, GJ, EJ, UJ, whatever J, I don't know, whatever it is. But then at the end of the day, these should be on your watch list too, because we go over it on the calls every single day, 5 times, 20 times throughout the week. So that's that, you guys. It's about to be on 5 o'clock, so we've been on for about almost 30 minutes or so, 40 minutes. Don't want to keep it on too long. We had a lot of good back testing earlier in the call, so I'll send out this recording and make sure it gets uploaded right away. Go through and watch it over the weekend, just on ideas on how you want to back test your charts, how you want to look at your charts, and just looking at your moves throughout the week. So go through, and it doesn't have to be GU and EU. Go through, study NU, study AU. Study those pairs and go look at the DXY. And then while you do your studying, this is part of your studying. Like, it's so much that's not just with the charts that come into, finding your moves. And the extra resources, go to your extra resources in the Discord, and then look at your correlation homework right here. Bring up your correlation, find out what pair you like to trade, AU, GU, EU, and find out what it is most correlated with. It's going to be heavily correlated with one of those USD pairs. So find out what what pair is, where your correlations lie, and then pick those pairs to trade, because you're going to find moves. I promise you. I promise you, promise you, promise you. Just like we looked at EU, GU right now from just this moves from this morning. If you got stopped out for, like I said, if you didn't find that buy for London, or you didn't play the EU sells, there would have been no way that you didn't play the GU or EU buys, for New York, right? So, and it's just like I said, going through and doing that every single day. So that would be any homework that, I'm not giving you guys homework where I'm going to be looking for it and whatnot, but go through your charts, do your markups, and just study. But yeah, you guys, that's that. And don't spend all weekend looking at your charts too. Like, enjoy the weekend, go out, go eat, go just live life a little bit, right? Don't get just overly consumed with looking at the charts. It's only so much you can do. It's only so much you can do, and so only so much you can study. The real studying and the real stuff comes into, the actual practice. So just remember that when you're studying, don't get occupied staring at the charts all day and whatnot. But that's that today, you guys. It's coming on 5 o'clock, so we'll go ahead and end the call. I appreciate you guys for hopping on and staying on the whole time. It looks like almost everybody that hopped on at the beginning stayed on, so that's always dope to see. So like I said, I appreciate you guys for hopping on. I'll send out the schedule this weekend, going in what we got for next week. We'll probably have a call on Sunday. I'm not too sure yet. But yeah, you guys, like I said, you guys got any other questions, feel free just to hit me up. Hit me up. I'll get back to you guys sometime tonight. And yeah, that's that. So hope you guys have a good rest of your night. Have a good weekend, and I will see you guys soon. Oh, in the call.